Well, it looks like the Paysafe stock has continued to fall ever since my last video. So today I wanted to bring you an update and let you guys know if I still am going to hold on to this thing, if I'm going to buy more, or if I'm just going to cut my losses and move on to something else. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin and I am your host. In today's video, we're going to talk about Paysafe. I wanted to bring you an update, guys, because I bet a lot of you are feeling exactly like I am right now. You probably keep asking yourself, why do I keep holding this falling knife? Better yet, why do I keep buying and adding to my position on this falling knife? Because the only thing that Paysafe has done since I started buying it a year ago is go straight down and make new low after new low. So in today's video, I want to identify, why do I keep holding it? Why do I have enough conviction in it to hold something that I was once down 80% on and added more, and I am now currently down at least 40%? Guys, sometimes you get those bad investments, right? Sometimes you get those investments that you got to admit that you're wrong. You got to cut your loss and you got to move on. When I first bought this stock, I knew it was going to be a long-term hold, but I also thought it was going to do a lot better than this over the course of 2021 and even in the beginning of 2022. If you are new to the channel and you've never seen those videos that I've made about Paysafe, because I've made a whole heck of a lot of them ever since it was a SPAC and it was BFT, I will link those right here if you want to check those out. Real quick, guys, if you get any value out of this video, subscribe to the channel for me. Like the video so it gets out there to more people. And also come join us at the Patreon if you want to be part of an amazing family and get all of our trade setups. Day One Squad, you guys know that I love you. Thank you for your support. Guys, I want to go over the two reasons. I've got two reasons why I continue to hold this stock. I'm also going to break down the chart for you and give you those levels that you should be looking to buy if you want to continue to buy Paysafe, and then the price target of where it could be headed in the future. The goal of this video, though, is to identify why I think Paysafe is going to be a good investment for me and my portfolio over the next 5 years. Guys, I'm going to make this super simple and just give you the two reasons why I have conviction in this thing and why I will continue to build out my position moving forward. You guys know that I have watched this channel. iGaming, video gaming, online gambling, sports betting are some of my favorite stocks to invest into. So like I said, I'm going to make this simple. The first thing that I really like about Paysafe, take a look at all of these different partnerships that they have gotten themselves into, expanding into different sports betting industries, opening up different Ecashes. Guys, they are the payment processor for a lot of these big sports betting companies. We've talked about it in other videos: Twitch, Amazon, DraftKings, all of the ones that are going to benefit from those expansive industries that are continuing to grow. Now, with that being said, guys, that's only one part of it. And with that part, it's kind of a forward-looking thing. And I don't like to invest in stocks based off of what they could do in the future. I like to base my investments off of what they are doing today. So the second reason why I really like Paysafe is because they are a cash flow machine. And I think that over the course of the next 5 years, as they get more revenue, as they grow into more sports betting, online gambling, Ecash, digital wallets, their free cash flow will continue to grow and grow and grow. And that's where I pull my intrinsic value from. This is not a fast growing company, guys. Their revenue growth is not 30% a year. It's like 5 or 8%. They are expected to ramp up their growth over the next couple of years. But even if they stay the same, I think that there is at least 100% upside from the current levels. If you take a look at this discounted free cash flow sheet, guys, you can see here, even if we take extremely conservative growth metrics like 5% revenue growth from today for the next 5 years, which they are already projected to grow at least twice that by other analysts. The next thing I did a 21% free cash flow margin. That's what they're doing today, guys. They are doing 22 to 23% in free cash flow today. You can see they did, in their trailing 12 months, they did $321.4 million in free cash flow and about $1.485 billion in revenue. Now, if we do that, we are getting a intrinsic value per share of what it's worth today at about $8.50, which is 200% upside. But guys, let's be even more conservative. Let's drop our free cash flow margin all the way down to 15%. That still comes out to about $6 per share today, more than double what the current stock price is worth. The reason why I haven't continued to average down over the last couple of months is because I had a feeling that it was going to drop down to these much lower levels, and I wanted to wait till I could bring my cost basis down substantially. What's crazy, guys, is I could buy 10 shares of this company for the same price that I bought 1 share a year ago. So it is a no-brainer to me to continue to build out my position because I can do it with a relatively small amount of my overall portfolio percentage. And I still think that there may not be exponential upside, but I still think that there is enough upside to make this a very profitable investment over the next 5 years if you can continue to be patient. Like I said, guys, iGaming, online gambling, video gaming, Ecash, digital wallets, all of those are industries that continue to grow. Bill Foley, he is a beast at growing companies like this, and the free cash flow is something that I am very interested in because they have done it once, they've done it twice, they continue to do it year in and year out. Their net income may not be very good, their revenue growth may not be very good, but their free cash flow growth, it is good, and I believe that it will continue to grow. But last thing, guys, let's go ahead and jump over and take a look at the chart. Now, we've looked at this chart before, guys, and it looks bad, right? I mean, it has done nothing but go straight down. And, the last time we made a video on it, it was right after this big gap down. And the most recent event on the chart is another new all-time low, which is very disheartening, right? However, I do think that we are starting to see some signs of seller exhaustion. I think that Paysafe is starting to find a bottom. When you look at some of the valuation metrics, I mean, guys, the price to sales ratio is currently sitting at 1. The price to cash flow is sitting at 6. You saw by the discounted free cash flow sheet, the intrinsic value per share should be above $2.80 as of today. So I do think that we are starting to find that bottom. The reason why I am not overly scared of what I'm seeing right here, guys, is because we don't need to even get back up here above that $10 NAV price for this to be a great investment. Even if we were to go up here and close that gap that it gapped down on after or during earnings, back in November, it would be an amazing investment. I mean, take a look here, guys. I mean, even from current prices, that's like 160% upside from the current price. The other thing that makes me think that we are starting to see, some seller exhaustion is if we go from the IPO price to the all-time high, we're currently sitting right at that 1618, which is a major, level that assets can make big trend reversals. They can, totally change up and switch directions at those type of areas. Now, every time historically we've made a new all-time low, we've typically seen a pretty vicious dump shortly after. It is actually sat there and pretty much chopped around without the violent dump for longer than it has any time before. So I think that it's starting to get that bottom. The other thing, guys, is we had a big gap down today, and we've already gone up to close that gap for the most part. Now, we really need to get back above $4.50. If you can take this thing and you can get your cost basis down below $4 and $4, honestly, then you've got a lot of upside in this stock if you can be patient. I think even at the very minimum, guys, we've got to return back to the mean and start making our way back up towards the 200-day moving average. I think that we're actually going to see, some type of an attempted rally. And if we can just make a higher low one time, I think we'll be in good shape. If it was to rally here, guys, make a higher high than this little tiny high here, make a little bit of a higher low locally, then I think we could be headed up to try to close that gap. Honestly, though, guys, it's a value play for me. Obviously, it's not a good value stock per se when it comes to traditional value, metrics. But overall, the cash flow is enough for me to continue to buy and hang on to it. I don't think that there's that much more downside from current levels. Now, don't get me wrong. It could see lower prices. And honestly, it could continue to stay, in these levels for years to come. I mean, it could honestly stay right down here, forever. But I don't think that's going to happen. I do think that we could see lower prices from here, but I do think that we are starting to see the bottom be put in, and I think that you'll start to see it move in another direction over the next couple of months. So let me know what you think down in the comments, guys. I'd love to hear from you. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. But come join us at the Patreon if you want to be part of an amazing family, and I'll see you guys in the next one. Peace.